You've worked hard to save up your first $1,000, but the idea of actually investing it is terrifying. What if you lose it all? What if you click the wrong button? You're not alone. Most people get stuck right here, letting their hard-earned cash get slowly eaten by a silent financial pest called inflation. But what if I told you there's a simple, beginner-friendly way to turn that cash into a fortress of different investments? In the next few minutes, I'm going to show you the exact steps, and it's a whole lot easier than you think. That little voice in your head screaming, "Don't do it, you're about to make a huge mistake." That's the number one reason most people never start investing. They picture the stock market as some high-stakes casino for Wall Street pros, and they're convinced the game is rigged against them. The fear of losing money is so real that it keeps them on the sidelines forever. But here's the secret. Building wealth isn't about gambling. Trying to get rich quick by picking a hot stock is like trying to catch lightning in a bottle. For 99% of us, successful investing is the opposite. It's more like planting a tree. It's systematic, it's patient, and it's something you can set up in less time than it takes to watch a movie. So my goal here is simple. No Wall Street jargon, no confusing charts, and absolutely no get-rich-quick nonsense. Just a straightforward, stress-free guide to making your first investment. We're going to build a solid foundation that will serve you for the rest of your life, using a method that legendary investors recommend for beginners. You don't need a finance degree, you just need $1,000 and the will to take that first step. By the end of this, you'll not only know exactly what to do, but you'll be wondering why you were ever so scared to start. Section 1. The real risk is doing nothing. Before we get into the how, let's talk why. Why should you push past that fear? The answer comes down to two forces, one working against you and one that can work for you. The first force is inflation. Think of your money as a bucket of water. Inflation is a small, invisible leak in the bottom of that bucket. Every day, a little bit of its value drips away. That $1,000 sitting in your savings account, it's losing buying power. The coffee that costs $5 today will cost $6 in a few years. If your money isn't growing, it's shrinking. So that fear of losing money in the market is making you definitely lose money to the slow leak of inflation. Now for the fun part, the force that works for you. It's the most exciting concept in all of finance, compound interest. Einstein supposedly called it the eighth wonder of the world. Think of it this way, compounding is when your money starts making its own money. Imagine your $1,000 is a little worker you send out into the world. When you invest it, that worker earns a wage. But with compounding, you don't just pocket the wages, they become new workers who also start earning wages. Pretty soon, you got a single worker turning into a small team, then a whole factory, and eventually an entire army of dollar workers generating wealth for you, even while you sleep. Let's make it real. Invest that $1,000 with an average 8% annual return. After year 1, you have $1,080. The next year, you earn 8% on the full $1,080. It's a small difference at first, but over 30 years, without adding another dime, that $1,000 could grow to over $10,000. If you start adding just $100 a month, that number can explode to over $150,000. This is the cost of waiting. Every day your money isn't invested is a day you're giving up the most powerful wealth-building tool you have. The real risk isn't trying and failing, it's doing nothing at all. Section 2. The 4-step stress-free investing blueprint. Okay, you get it. You can't afford to let your money just sit in a leaky bucket. So, let's get to the good part. The exact step-by-step process to put that cash to work. Step 0. Build your financial foundation. I call this Step 0 because you absolutely have to do this before you invest. Investing without this foundation is like building a house on sand. Two things are non-negotiable. First, an emergency fund. This is your financial spare tire. It's 3 to 6 months of essential living expenses parked in a high-yield savings account where you can grab it fast. If your car breaks down or you lose your job, this fund saves you from having to sell your investments at the worst possible time. Second, destroy high-interest debt. I'm talking about credit cards and payday loans. Trying to invest while carrying high-interest debt is like trying to run a race with a parachute strapped to your back. No investment on earth can reliably guarantee the 20% return you'd need to outrun that drag. Paying off that debt is a guaranteed return. Get rid of it first. Once that's handled, you have the green light to invest. Step 1. Open the door to wealth, your brokerage account. To buy stocks, you need a special account called a brokerage account. Think of it as a special wallet for your investments, separate from your everyday bank account. Opening one is surprisingly easy, takes about 15 minutes online, and is free on the right platforms. You'll just need your social security number and bank info to link for transfers. For beginners, you want to look for two things: $0 commission fees on stock and ETF trades, and the option to buy fractional shares. That just means you can buy a small slice of an expensive stock, like buying a single slice of a whole pizza instead of having to buy the whole pie. There are tons of great user-friendly options out there like Fidelity, Charles Schwab, or Robinhood. Fidelity, for example, is often praised for its customer service and educational tools, which is a big plus when you're starting out. Don't overthink this step. Pick a reputable one with low fees and move on. One quick but important note. You might see an option for a standard brokerage account or a Roth IRA. A Roth IRA is a retirement account that acts like a tax-free greenhouse for your money. Once it's in, it can grow completely tax-free forever. If you're saving for the long haul, a Roth IRA is one of the best gifts you can give your future self. Step 2. The $1,000 question. What should you actually buy? This is where everyone freezes. You've got $1,000 in your shiny new account and thousands of stocks to choose from. Apple, Tesla, that meme stock your cousin won't shut up about? The answer is simple: none of the above. Trying to pick individual stocks is the single biggest mistake a beginner can make. It's like searching for one specific needle in a giant haystack. Even the pros who get paid millions fail to find the right needles consistently. So instead of trying to find the needle, you're going to buy the entire haystack. You'll do this with something called a low-cost, broad market index fund ETF. I know, that sounds like a mouthful. Let's break it down with two analogies. An ETF, exchange traded fund, is a pre-made basket of stocks. Instead of buying one egg, a single stock, and risking it all if it cracks, you're buying a basket with thousands of eggs. Total safety in numbers. Specifically, you want an index fund ETF. An index fund is like betting on the whole team to win the championship instead of trying to guess which single player will score the most points. It doesn't try to be clever, it just owns a small piece of the entire market, tracking its overall performance. The two most popular and recommended ETFs for beginners are VOO, Vanguard S&P 500 ETF. Buying VOO is like betting on America's all-star team. You instantly own a small piece of the 500 largest, most profitable companies. Think Apple, Microsoft, and Amazon. It's basically a bet on the US economy as a whole. VTI, Vanguard Total Stock Market ETF. This one is even broader. VTI is like betting on the entire league. It gives you a slice of basically every publicly traded company in the US, over 3,500 of them. So, which one is better? Honestly, it's like choosing between two top-tier running shoes. Their performance over the long run is nearly identical. Just pick one, VOO or VTI, and move forward. They are both fantastic, incredibly diversified, low-cost choices. Step 3. Pulling the trigger, making your first trade. You've opened the account, you've picked your ETF, now it's go time. This part is shockingly anticlimactic. Fund your account. Transfer your $1,000 from your bank to your brokerage account. Search the ETF. In the app or website, type the ticker symbol VOO or VTI into the search bar. Place your order. Click the trade or buy button. The platform will ask how much you want to invest. Don't worry about the share price. Just enter that you want to invest the full $1,000. Confirm. Double check the order and hit confirm. That's it. You did it. Congratulations. You are officially an investor. You now own a piece of the US economy. So let's recap. You built your financial safety net with a spare tire and by dropping the parachute of bad debt. You opened a brokerage account. You ignored the hype and chose a boring, smart, diversified index fund like VOO or VTI, and you pulled the trigger. The point of this first $1,000 isn't to get rich overnight, it's to break through the fear and build the habit. The journey to financial freedom is a marathon, not a sprint, and you just took the most important step of all. You started. By doing this, you're already way ahead of all the people who let fear keep them on the sidelines. You've planted a tree. Now your job is to be a patient gardener, to let it grow and keep watering it. So what's next? The best thing you can do right now is make this automatic. Set up a recurring investment, $50, $100, whatever you can afford each month, into that same ETF. Treat it like a bill you pay to your future self. If this video helped clear things up for you, do me a favor and hit the like button. It really helps the channel out. And I want to hear from you. What's the biggest fear that's been holding you back from investing? Drop a comment below. I read all of them and will do my best to help. Finally, if you want more simple, no-fluff guides to building wealth, make sure you subscribe. Welcome to the journey.